Hello and welcome, everybody. This is the Hot Corner Insider Live Strategy Session. I'm your host, Steve Straz. I'm the Director of Research here at All Star Charts. We do this one every week on Stock Market TV at 1 o'clock Eastern Time on Wednesdays. We're going to keep the intro short. We have a lot of new trade ideas. That's information in and of itself. First, our disclaimer. Nothing we discuss here today constitutes any solicitation to buy or sell any securities. This is all solely for informational purposes and not to be construed as investment advice. For more on our disclaimer, you can visit stockmarkettv.com/terms. Hey, Dawson. Hey, Curtis. Hi, Robert. This is the value line geometric average. Value line geometric index. It is an equally weighted representation of what most stocks are doing. It's about 1,700 components in here. It makes up about 90% US trading volume. Most stocks are still in the process of completing textbook trend reversals. We're gonna talk about some today. Are about to complete primary trend reversals. What does that mean? That means these stocks were in a bear market in 2022, and they were in a trendless sideways market. It's an accumulation base, rounding bottom pattern, trend reversal pattern, right? But this is the sideways phase of the cycle. You have down, sideways, and now maybe up. Why is this important? Most stocks are just now kicking off fresh uptrends. Sure, for the past year, if you're watching this show, we're talking about stocks that are already making new all-time highs, completed trend reversals. They're the leaders. There's a reason why we focus on the leaders. They're the best stocks. They're the outperformers. That's where the alpha is. What we don't talk about much on this show is what the rest are doing or have done. Well, they look like this. Just a lot of sideways while the leaders have been leading, taking out these old highs. This is what most things have looked like. David Lundgren was on the show today. This is one of the charts that he brought. Go watch it. It's always, some of the best shows when David joins us. And he agreed. Value line, great representation of what most stocks are doing. He made another great point, which was that this is not a good indication of value creation or wealth creation. You're looking for an indication of wealth creation from the stock market. You want to look at something that's cap weighted, like the S&P 500. Most stocks still not quite in a bull market. But I think we're getting there. This is one of our breadth dashboards. We're looking at moving averages and the percentage of stocks in each sector that are above the moving average listed here on the x-axis of this table, right? So we're going short to long, starting with the 10-day, 20-day, 50, 100, 200. So on the left-hand side of this table, it's showing you what the short-term trends are like, and then all the way over here on the right, the long-term trends. What stands out? Most cyclical sectors, commodity stocks like materials and energy. Financials also look great. Cyclicals look pretty good. Industrials across the board. Every time frame. More than 75%, more than 76% of components are above their moving averages from the 10-day to the 200-day and everything in between. That is, talk about some really, really strong market internals or sector internals. This is not just measuring large cap industrial stocks. This is all industrial stocks in the S&P 1500. So include small and mid caps, which there are a lot of. Industrial is a really diverse group. This is so bullish. The green on this screen is more or less all highlighting risk on or offensive areas of the market. Industrials, financials, materials. Cyclicals. This speaks to risk appetite. It speaks to a broadening of participation, broadening of the bull market. I think most stocks are going to complete reversal patterns really soon. I think the value line's about to break out, complete this trend reversal. I think we're seeing it with small cap Russell 2000, right? 2000 is that level. We're seeing it with speculative growth indexes like ARK and the IPO index. Maybe biotechs. I think that would make sense. I know this is going to be hard for you guys to see, but let's just keep it really high level here. This is our S&P 1500 breadth dashboard, including all the industry groups. Right, so top left is the sectors, and then everything else is industry groups. Right, so this is materials. Look at all the green. Again, this is just moving averages from left to right, short to long-term moving averages, percentage of stocks in each subgroup that's above. So materials, look at all this green, right? Looks like gold's still not looking so good on a long-term basis, but everything else really looking excellent. Consumer cyclicals, a lot of green, right? It's the usual suspects here. It's your home builders, residential construction, textile manufacturing, building materials. Defensives, some red on there. Energy, everything but coal, right? Looks great. Financials, pretty much everything. I know regional banks have some work to do. Looks like mortgage finance down here. Healthcare mixed. Technology mixed. Utilities not so good. Real estate not so good. Industrials, look at all this green. Pretty much you could throw a dart at this industrials table here in the top right, and you're going to get some sort of industry leader. What's the takeaway? This is all incredibly bullish. We're maybe hearing a lot about how stocks like Apple aren't working, or the semiconductors are losing steam, or technology not so great on a relative basis. Hasn't made a new high, maybe rolling over below the 20-day moving average. Momentum's diverging. There's all these divergences. The more important development, really, of the past few weeks is some super impressive breadth expansion. There are more and more bullish chart setups, more and more primary trend reversals completing, right? Suggesting that the path of least resistance is now higher for more and more names. And we're having a pretty easy time finding new setups on lists like the Hot Corner. So let's talk about some now. Carvana. Again, risk appetite is just a really big theme for me right now. Whether it's the most heavily shorted stocks, whether it's meme stocks or meme tokens, all these crazy cryptocurrencies that are mooning when we're sleeping. ARK stocks. It's the risky stuff. It's working. We're talking about the Donald Trump SPAC, right? GameStop not working so much today. Carvana, highest level since what? Early 2022. This was in a 99% drawdown a little bit over a year ago. Trading around $3 a share. Now it's heading towards 100. We got long on this base breakout, right around 60. First target hit, I think, 92.50 is where the fib is at, but really for Carvana, let me zoom in here. I think as long as this bull flag is intact, we're going higher. So bull flag, I think you can use like 86.50. You don't want that bull flag to come undone, right? We coiled there nicely after the base breakout right here. Now it looks like next leg up is underway. So next stop, 148. Square. Be patient. We talked about putting an options trade on this one. We're going to do a call calendar spread, so it's okay to be early with that kind of a strategy. But if we're talking about buying the common, just getting long this name, let's let it break out first, right? So pivot highs, I think if you're scaling in, pivot highs 86. And then you're going to get confirmation here when this VWAP is reclaimed, which coincides pretty nicely with these 22, early 23 highs. Call it 90, 86 and 90. Let the base complete though, right? Big move, more than 100% off of the lows from, just late last year. This one just bottomed. This one just made its ultimate cycle low in like November of last year, late October of last year when the market bottomed. Up 120% since. It might have more digesting to do here. I mean, but the more times the level is tested, boom, 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 the more likely it is to break. I think Square eventually gets this breakout in the books. We want to be long above 90 with a first target of 134.50. Royal Caribbean, travel and leisure. It's working. We were talking on Spaces yesterday. I asked everybody if you could be a sell side analyst in any industry group, what would it be? I think we all kind of came to an agreement that we would do travel and leisure. Spencer said restaurants. I think we convinced him travel and leisure. You know, you got to do channel check. Your cruise line analyst. You have to go on a cruise. That's terrible. Above 136, this is a multi-year base breakout, sweet consolidation up here. What a range this one's traded in over the past several years, right? You could see the pandemic on the left-hand side of the chart. Fell below $20. Now back almost at 140. Looks like the breakout's pretty much happening now. Oh, we're just above 140 today. So the breakout is complete. This is a valid resolution as long as we're above 136, targeting 208. Ranpak Holdings Corp. They do packaging. Like when you get an Amazon package and it's got like foam or some sort of like protective cushioning in there, like paper. I think that's what they do. Ranpak Holdings. Pack. This one's not for everybody. It's sub 1 billion. So make sure it's, you know, meet your liquidity requirements. But if we're above $8, the reversal's in. This one looks really good. Clean too. Above 8. First target 18. Again, we love buying these fresh breakouts, right? So that was like buying Carvana at 60. Fresh reversal. Square above 90. That'll be a fresh reversal. Ranpak above 8. This has been our pattern. Let's keep buying it. MDU Resources. They do like natural gas transportation. They pay a nice little dividend yield. This is just a monster base. Pre-financial crisis base. All the way back to 2007, probably. Couple touches here, around 24 and a quarter. When this thing breaks out, you got to be long. These are some of our favorite patterns. In terms of a structural pattern, nothing better than this, or a .com bubble base. Those go back like 5, 6, 7 years further. Corvex Management, activist position. 3370 in MDU Resources. Main Street Capital, multi-year consolidation breakout. 45 is the level. Looks like the breakout's already in. Would like to see a more decisive move above those prior cycle highs. But again, clean level there, right? Nice shelf of resistance at all these old highs. We're above 45, along with the target of 64. General Motors. Who's surprised to see this one on here? Look, the executive vice president and the CFO were buying this one last May. Let's see how they did. They're buying it last May. Not bad. So they're buying right in here. Stock did go on to fall an additional 18% to its, ultimate cycle low here in November. But yeah, they're already, so if they got the lows in May, up almost 40% already. Not bad. And now the primary trend has reversed and the path of least resistance is higher, at least if we're above those 2022 and 2023 highs, $42. I think you get confirmation. We kind of drew the 38%, or it is where it is, right through this high. So 43. 42, 43. If we're above there, next stop 51.50. From there, I think we go back to those old highs. 67. That'll be a new all-time high for General Motors. Can't say that for Tesla. Airbnb. I like this one. I think this is going to be around for a very long time. It's changed the way a lot of us travel, or at least, book accommodations when we travel. I still prefer hotels, personally. But I think Airbnb is here to stay. The reversal's in. Already hit the 62%. If we're above 167, it's going back to those old highs, 220. 220 in Airbnb. It's trending really well. Slow and steady since completing this base. I think this base was pretty much done, I don't know, last summer. Kind of failed, fell back below, but Pearson Place, PSO. 13 is the level in this one. Monster base. Really big base in PSO. Let's see, zoom out here. Yeah, it's really clean too. I think 13, even 1250. We're above there. 22, 2240. This is a great looking chart. We're above 13, path of least resistance is higher. The reversal is in, and we are long with a target just north of 22. New holdings, new. We've been long this one for a while. I think we more or less got long after this little reversal here. Target hit 12 and change. I don't think this one's giving us any reason to stop owning it. A little bit of a pullback here today, down almost 3%. 1190. That's great. So maybe this is a little failed breakout or false start, right? Now you can buy it on strength back above that 1211 level. Yeah, this one probably needs a couple days. Work off the overbought momentum reading starting today. A little pullback. Maybe put it on the list. Set your alert. Strength back above 1210 or 1211. This is one of the best, best performing stocks that you'll find in the financial sector. Tommy Tuberville. Shout out Tommy Tubes. ESAB. This one also just recently hit our target. We got that $100 roll, right? Target was right up here at 100. Blew through it like we tend to see. The first time security hits 100, it tends to overshoot 100. That's exactly what is happening right here. I think if you're not already, if you're in it, you stay in it. Next stop 141. If you're not, maybe you get weakness back towards, we have a little gap here too at 100. Weakness back towards a little gap fill into 100. You're buying that weakness all day. 40% of upside from there. So that's ESAB Corporation. That is all we got for today. Questions, comments, concerns, want to say hi, share a chart, info@allstarcharts.com. Let me just see what we got in the chat before we sign off here. Yep. It's always fun to revisit old chart decks, Dawson. Preparing presentation now for something JC and I are doing in Miami in about 2 weeks, and was looking back at some presentations that I gave last time I was at this event. It's called The Money Show. It was October of 2022. And boy, were we all bulled up. We were talking about, the blowout extreme readings and sentiment and how things were starting to turn. And the dollar was peaking and rolling over. We had all of those, magazine covers about the mighty, mighty dollar. That was the top for the dollar. So yeah, it's always fun to go through these old chart decks. Solar, huh? Solar and pot stocks. It's a bull market when those things are going up. Sideways Qs, green equal weight S&Ps, green mid small caps next 1 to 2 months. I don't know what's going to happen next 1 to 2 days, Dawson. Listen, I think stocks are going to keep trending higher over longer time frames. We're going to have corrections along the way. it seems to me like it is time for some outperformance or some leadership from small caps down the cap scale, out on the risk curve, right? It's time for this bull market to broaden beyond just large cap, mega cap tech growth, blue chip names, industrials, right? I think it's time for everything else to start participating more and more. And, if you're industrials, you're like, what are you talking about? We've been participating. Yeah, but most other groups have not, right? There's industrials. I think we're starting to see it now from materials and financials with just really, really broad sector strength in these groups. I think those are the ones that we want to focus on. I think also there's going to be opportunities within tech and communications and the growthier sectors. And I think it's going to be in different names than we're used to being long over the past year and a half, right? The mega caps have done so much. It's not that they're going to stop trending higher, but maybe they're done leading. Maine, 6% dividend. Yeah, that makes sense because it's a really low volatility name. Look, it doesn't move too much, right? This, as much as it's clean and looks good, yeah, that's nice that it pays a 6% yield. Not exactly, a bull market stock. Low volatility, right? We want that high beta. We want that juice. So if you're looking for exposure to specialty finance, or I think it's an asset manager, 6% yield, nice. Some people, love that in a stock. For me, I want to be in the riskiest stocks in each sector, and Main Street, probably not that. Probably not that. How are we expressing a bullish bet on Airbnb? This show is about getting long common stock. Right? Might be something new coming where we talk a lot more about options. Maybe. Maybe something in the works. But for Hot Corner, we're talking about, this is a long only scan, right? We're looking for bullish chart setups, bullish patterns that we want to be buying in names that have experienced or are experiencing insider activity. So insider buying, institutions buying. We're looking to get long common stock. Me too, Joe. Hotels for the win. All right, guys. Thanks for joining. As always, thanks for making the show interactive and participating in the chat. I hope this was helpful. I hope we're all making money. Be here, same time, same place next week for the next Hot Corner Insider Strategy session. Until then, we'll see you on the morning show every morning at 8:30 right here on Stock Market TV. All right. Happy Wednesday, everybody.